All right. Well, continuing our pre-show conversation, I'm super excited to have on today Maryanne Morrow, who's the CEO of Ninth Gear. We were just talking about all the different areas we could cover. You, Maryanne or Mary? What's
Maryanne.
your preference? Maryanne. Yeah, I'd love to hear a little bit about your background, how you got to be running the company you're running, and a little bit more about Ninth Gear. Um, yeah.
Sure. First off, thanks for having me. I'm very excited about Around the Coin. And so I really looked forward to this conversation today. And especially, it was in Boston last week. So we could have, next time I'm there, we're going to get together and have a beer. How about that?
Let's do it.
So, yeah, I was also there to attend the Boston blockchain event that they had. It was their first one in real life, which was so much fun to see all the people I've been speaking with for the last couple of years. So my background is institutional finance. I studied engineering, finance, then law, and went right into finance back in Boston. And I spent a good 25 plus years working in capital markets. I've been involved in 2 exits. I was never the original founder, but worked at a company that we sold to Standard & Poor's in the late 90s, and then a second company, a fee-based asset management company, where we designed fee-based platforms for banks, broker-dealers, and insurance companies. We sold that in 2006 to BNP Paribas Asset Management, and then I stayed on through that transition, and then we sold that same company to Envestnet in 2010. At that point, I wanted a life without snow, closer to the grapes. So while it was great to see all my friends in Boston this last week, I know that those nor'easters are coming. So I moved out to California and really did not look back. I spent some time working at the Wall Street Journal, managing their custom content, all in the financial category, and then switched into the advertising part of the Wall Street Journal. And then I left corporate America. I took a little bit of a corporate timeout for some personal reasons in 2013. And it was then that I started to look around me and just saw so many people gathered at coffee shops and such working on startups. And so being in corporate America for as long as I was, I really didn't pay too much attention to them. But as I started to look at them and started to do some angel investing, I said, wow, there's this whole ecosystem all around me that I just didn't know about. So I started to take some classes because I didn't want my brain to go to mush. So Stanford was a great place for me to get some incredible education in a short amount of time. I took classes on angel investing. I took classes in valuations. Every Saturday morning for 10 weeks, I went to visit an incubator or accelerator here in the Bay Area. And I just learned how to play the game. I joined an angel investing group, immersed myself in due diligence, and I feel like I got a degree in due diligence. If you start to get to know me, you know that I don't really ever put a toe in the water. When I decide I'm going to do something, I dive right in. So I did a lot of due diligence, and I began to work with some of those companies and work with them on how to monetize and commercialize. I love color coded spreadsheets. It's the engineer in me. And so I started to work with a couple of them, a couple of great tech people, but didn't understand the business side of the house. And so in every startup, there's the technology piece and then there's the business piece, and they have to be working together. So I started to spend significant time with a couple of them. And that led to me hanging out at Plug and Play a lot, which is one of the big accelerators out here. Plug and Play was started by Saeed Amidi, and he owned Medallion Rug Gallery, which still to this day he owns, which is a shop on University Ave in Palo Alto. And he would rent out space above the shop to some startups. And there were a couple of startups that came in that were really famous that turned out to be the players that started Google. And they asked for equity for their rent versus actual dollars to go to Saeed and his family.
So
So
smart.
like he took it. And I mean, there's so many of those great stories out here. One of my friends designed the red envelope for Netflix and they said, "Hey, you want to take equity?" And he's like, "No, I want the cash." Well, don't feel sorry about him because he's done really well for himself. But those early days when founders have equity, I mean, that Saeed made so much money on that one deal. And he bought this light bulb factory and turned it into what is now called Plug and Play. So they have 450 startups over there every day that are working every day. Every year they find somebody that's living there because you're not supposed to live there. You're only supposed to work
Yeah,
there during
yeah,
the day. But
yeah.
there are some folks that just spread roots. But I was on the back deck thinking about investing in a group of fintechs that were going through, and I watched 50 or so startups do their pitch. And afterwards, I was on the back deck just talking with some folks as to what we saw. And the word blockchain came up time and time again. And someone just took me aside and explained it to me in a way I had never heard before. I had heard blockchain was when I was back in Boston and every day in my black suit and pearls. And it was just something that when I heard about it in 2009, it was so nascent that it was all about overthrowing monetary authority. And I said, yeah, that's never going to work. And I just stopped listening and got up and left. Wish I'd stayed. I would have been a whale at this point and wouldn't need to be doing anything. I'd be on a beach somewhere. But
Who knows?
right. But when I learned about how blockchain worked, or what I always talk about, distributed ledger technology, because people conflate the word blockchain and Bitcoin so much that I never really ever use the word blockchain anymore. But when someone explained it to me and the underlying technology, the light bulb went off for me. And I said, gosh, if we can harness this technology correctly, this could eliminate the breaks, the reconciliation errors, and the corrections in the back office. And I said, whoever does that successfully is going to make a shit ton of money. And I want to be right at the tip of that spear. So it was at that point that I started to really dig in and dig in deep on the technology all the way through 2017. And then I started thinking a lot about securities law, what I should put on chain, what I should put off. But for me, distributed ledger technology provides finality of payment because an atomic transaction can go all the way or not at all, or it just stops. So that provides the finality of the payment, and that is a critical component in what we do. And the other is this having an immutable record and single source of truth is what eliminates the breaks, reconciliation errors, and corrections. And you cannot underestimate the cost. Billions of dollars every year are spent on that, and we can eliminate those things.
When you, that's an awesome background, especially being right at that plug and play office. When you say the breaks and the reconciliations, what are you referring to? Are these trades in the stock market or?
I think about settlement, and that's what we're really focused on is settlement. And settlement is kind of like when you buy a house. When you buy a house, you don't get the keys to that house until everything has been investigated and the money has flowed through. Then you receive the keys at the very last minute when everything has been, the dust has settled. Same thing is true with transactions. And real-time settlement is a critical component of the transaction. Sometimes you trade on one day and then you settle on another. When I first came into the markets, it was T+7, then it went to T+5, then T+3, and it's different for each type of transaction. I'm focused on foreign exchange or FX. It's taking dollars, moving them into yen, euro. There's 180 different currencies. So that's what we're focused on. And still today, you can do CAD or Max Canadian dollars or Mexican pesos in T+1. So you trade today and then tomorrow you settle, but the majority of the others are still T+2, and then it goes up from there. So even though you might potentially settle on T+2 today plus 2 days, sometimes that transaction, to ensure that everything went through correctly, could take a long time. And when it goes wrong, it goes really wrong.
Wow. So this is true universally. So if I wanted to trade $1,000 of Canadian dollars to Mexican peso or Japanese yen,
Mhm.
it's going to take. So I pay today, and then I wait 24 hours until I get paid the
Yeah.
return.
So what happens is that there's a credit component behind these transactions. And so I'm talking only on an institutional basis. You could waltz into Bank of America, for example, and you could say, "Hey, I want to take my lovely wife on a trip and we want to go to Paris. Here is, $10,000. Give me the exchange in euros." And they're going to do that for you because you're one of their customers. So they're going to give that to you right now. But behind the scenes, it's going to take them 48 hours for that trade to go through. And there's an enormous amount of money that's changed hands on a daily basis. Do you know how much money is exchanged on a daily basis, Mike?
In Forex across the
Mhm.
world. My God.
Globally, on a daily basis.
Okay. I would guess. How much money is that? How much money? How many US dollars are in circulation? Like,
A
can you
lot.
tell me how? I would guess 10 trillion.
Well, you're in the ballpark. It's $6.6 trillion per day. Usually people guess in the billions, and it's an enormous amount of money that is exchanged on a daily basis. So, and it's gone up. It was 5.1 a couple of years ago, and they do a triennial survey with the BIS, the Bank for International Settlement, does this survey every 3 years. And so, and just think about global commerce. It's going up, not slowing down. I mean, there's huge supply chain management. You can see
Yeah.
how much stuff is moving around the world. And because there's this credit component to it, when we decide today that we're going to make a trade, it's almost the end of the day for the markets. But if we get this trade in, we're going to have the trade done today. Tomorrow, we're going to confirm the trade and then arrange for the financing for the credit component. And then on the third day, on Wednesday, that money would come through and then we can exchange hands. So what we've done is we've changed this around so that you arrange the funding first so that when you go to trade, it can immediately settle. And real-time settlement is a critical component for many things in the markets. Just look at what happened with Robinhood a couple of
Yeah.
months
Oh,
ago.
totally. I mean, it
Yeah,
just makes common sense that you would want the faster you can get the money, the more you can do with it. You can then trade it for something else. There's probably huge arbitrage opportunities that aren't available if you have to wait multiple days. That would be, it's like, it's got to be just the overall efficiency is way slower and less when it takes longer. Right.
right.
So, how
Yeah.
is this? I want to ask you because just to wrap my head around it. So, the way this works is that there are multiple exchanges that monitor people's transactions across different currencies, or is it more centralized than that? This is prior to any blockchain stuff. So this is like if you want to trade US dollars, do you typically say you want to trade a significant amount, like a 10,000 or 100,000? Is that, are there companies out there, private companies that facilitate that transaction? Or is it centralized and regulated
Yeah,
in a
so
sense?
just like you go to eBay for, and you're going to look for price discovery of, like, say, a baseball card, right? There, you have buyers of things and you have sellers of things, and you would do mostly a request for quote that goes through, and there are eBay type of companies, we call them electronic communication networks, that match up a price taker, those people that need to do the trade, and they're usually a corporation or a real money asset manager, and they pair them and they allow them to find liquidity providers or market maker on the other side. Think of Ninth Gear, which is our company, is a button on the platform to buy it now. So we're like the buy it now button on these ECNs, and we're working with a variety of them.
What's an ECN?
An ECN is an electronic communication network. Think of it as a eBay type of company that's matching together buyers and sellers. An
Mm,
ECN, or an electronic communication network, matches up a price taker that needs to do a trade with a market maker that has the liquidity.
got
But
it.
not every one of the transactions are electronic. There are still people that pick up a telephone and make a call, and it goes through voice. So it's a very fragmented type of market, and there's a dislocation between time zones, geographies, currency, and risk.
Mm. How what's like so out of the 6 trillion, is how is that broken down? Like, is there a few exchanges that do the vast majority of the transactions? And I guess that's is it majority US dollar, or is
Well,
USD?
88% of all transactions have a USD on one side of the trade.
Wow, really? 88?
Hmm. Yeah,
Wow.
yeah. So it's, you have to think about, looking at both sides, right? Like there's both sides of
Yeah.
the transaction. So the dollar is still a really important piece of things.
How do you think the fact that the United States government just printed off what 6 trillion dollars? How does that what impact does that have on foreign exchange? Do you think in the short term and medium term?
So I'm not an economist and I don't pretend to be one.
No, I know.
But
I mean, no one knows the answer to that. I
yeah.
am pretty
So
convinced.
there is money in motion, but there is just not enough liquidity in the world. Liquidity has been contracting globally for many years, and I think it will continue to contract. So even though people are printing money, there's just not enough liquidity at the right time. And you see these bizarre spikes in September of 2019, the repo market freaked out and there were just massive spikes because there just was not enough liquidity. So I see that liquidity is a very important item as you looks to move these transactions through,
And why wouldn't there be enough? You think
because
there's
there's
just not
not
enough
enough
money
at the right
supply?
time. People are amassing things,
Mm,
amassing and ring fencing, and a lot of the new rules and regulations, especially that came out after the 2008 meltdown, has caused banks in particular to hold on to money and not move it around. So you see that they have money. It's just not in motion all the time because they're conducting regular business and it's clearing checks, making sure the
mm.
credit card payments go through. So it's there, but it's just not always available when you need it.
Yeah. Yeah. It seemed like this was kind of the first instance after COVID where money was sent to people for the most part. I mean, I don't know the breakdown of this, but it seemed like people got checks in the mail where prior in 2008, it was like bailing out the banks, which I
Mhm.
think was just, I mean, it seems like a really bad idea to bail out really big companies, but I don't know. I mean, isn't this the classic debate between like Hayek and what's the other guy's name? Oh, I'm drawing a blank. This was kind of the 20th century debate was whether the government should be involved in economics to money control. Like should a
Yeah,
government come in and say to a private company, "Hey, we're going to bail you out," or "We're going to control the money supply to help certain companies survive." And it seems a little bit like I like to think of it sometimes as the analogous to the evolution of like in nature, where if there's too many foxes in nature, eventually the foxes will die out because there's not enough food supply.
yeah,
But if someone were to just drop in like fox food, little, then company in the case of companies stay alive artificially where they shouldn't have, and
right.
I wonder if that happens more often than not.
Well, paying individuals has increased the savings rate. It's also had folks dabble in some types of speculation, especially when you saw a lot of individuals that really didn't understand how to invest and they were doing some very speculative things. And that's where I see that what happened with GameStop, a lot of people were dabbling and
Yeah.
really didn't understand and they did things on margin. And most companies do not allow some of those trading to happen unless you're a sophisticated investor. Those rules were not in effect at Robinhood, and they really did not anticipate the value at risk that needed to happen with the NSCC. So that's why there were some issues with that company in particular. But they're
Wait,
surviving and
Wait,
they're
can you tell me more about that? It's just to make sure I understand it. So Robinhood uses an underlying transaction company that does the actual trading, right? And Robinhood
Well,
didn't put the
they sell your data to companies like Citadel. And
Mhm.
while you may think that your account is free, it's really not free because they're using your data. But the value at risk was that a lot of individuals purchased some stuff at GameStop, and the value at risk that they needed to have on hand in case something went sideways was not sufficient, and that's what triggered the NSCC to call and say, hey, you need to put up $3 billion, which they negotiated down to about 900 million. So there's plenty of information out on the internet.
Mm.
I don't want to spend our time talking about that, but there are things that happen in the markets that, from a compliance and regulatory standpoint, unless you've been in the markets for a while, there's a huge daisy chain of stuff and bad behavior that can happen quickly when things are not done properly. So that was what I believe tripped them up. So, but there are things that you touched upon, some items about bailouts from the government and certain companies. And if you look at what happened in 2008 in particular, there were some companies that were bailed out and there were some that didn't. For example, Lehman Brothers was just left and died. And Lehman Brothers went out on a Sunday night. So I know companies that, in particular, talking about what we do on FX trades in particular, there are some companies when you have to send your yen to Japan, you're expecting your dollars to come back on the other side of the transaction. And because Lehman went under on a Sunday night, I know companies that just didn't receive the other part of the trade and they were left
Whoa.
holding. And that's the same thing. It's called delivery risk or settlement risk. It's also called Herstatt risk, which, if you're a scholar of the market, in 1974, on the verge of bankruptcy, there was a German bank called Herstatt Bank that went under, and they took in the Deutschmarks and they never gave back their dollars. So they took the Deutschmarks in knowing that they were on the verge of collapse.
Oof.
And so that is still something that happens in the market, and it in the more common term is settlement risk. And I believe that settlement risk is unnecessary, and that's one of our missions, is to remove that from the market. And we're starting with FX because it's large and liquid.
Yeah, yeah. What if you had to guess? I mean, are we even at 1% in terms of the amount of FX trading that's being done via blockchain technology?
We're not anywhere near that.
No. Wow.
It's
Yeah.
it's it's not happening right now. So
And do you
we're
think
really,
it'll
yeah.
like I'm trying to visualize how this goes down going forward. So if I have US dollar uh, in my bank account, let's say, and I want to trade it for yen, I have to have a place to store that. Would is the way to do this on the blockchain that you use like USDC or Tether and then trade that for an equivalent in Japanese yen? Or
So
how does
we're
it mechanically
yeah.
work?
So I'm not going to put that on a podcast because that's some of our secret sauce. But I can tell you that when I first started in 2017, I called 100 banks or financial institutions and I asked them two questions: what are you doing with blockchain, and what are you doing with cryptocurrency? Everybody that I called, with the exception of one, which is Fidelity, laughed. They're like, "Yeah, that's never going to happen." At some point, fiat currency, which is money that is backed by a sovereign government, like the dollar, the yen, the euro, that area, CBDCs, central bank depository types of currencies, which there are about 70 or so of those different projects that are happening, and crypto will at some point converge. We are really far away from that. CBDCs 5 to 7 years out in the future. There's a lot of talk about them, but I met with the Fed last week in Boston. I met with also some of the folks in Singapore last week. I know folks that are working on the digital dollar project, and those projects will take a long time to develop. Crypto, there's a lot of hype, so there's just this constant fog machine. So there's some stuff that's real, and there's some stuff that is just a lot of hype. So we are working to have both horizontal and vertical interoperability with these types of projects, but we're building a system that works today, and financial institutions that are moving this 6.6 trillion around the world are not ready for any type of digital currency today. At some point, it will develop, and we're leading the way to make that happen. It's kind of like this. I think about the red envelope at Netflix for a while. Thank God we've had the ability to stream, because that has saved so many relationships because during the pandemic, because we just needed a distraction. But read was so incredible to think so far into the future about how this technology was going to evolve. But we had to go through the red envelope phase and receive those DVDs in the mail. Sometimes you could get one at a time, three at a time. I was always shocked at how fast those things came. When you get something checked in, it came back right away, and it was a great service. But we had to go through that. I can't imagine going to my mailbox and grabbing a DVD player. I mean, a DVD from there and putting it in a player, right? I don't even own a DVD
Mm.
player anymore. We had to do that. It's the same thing with this. We have to go through this time where we prepare for this digital transformation. And while I believe that as COVID, as terrible as it was an accelerant or catalyst for change. And so a lot of the conversations that we had at the beginning of 2020, when the meltdown and just everything stopped, it took a little while for people to understand this new normal. One of our clients was the only person in a 60-story office building because he needed to trade. His bank was not ready for being remote or being remote at your home for that long. But we are moving forward, and those conversations started to accelerate, and now we're moving forward in so many of these
Mm.
new ways of doing business. And I believe that we will continue to accelerate those. And so digital types of currencies will happen, but the underlying technology, this cryptographic technology, is so critical because we can have this immutable single source of truth. And when you do that, it just saves so much money on the what happens if it doesn't go right. So it just solves a lot of problems. It's a very elegant solution to allow transfers of money moving forward.
Yeah. Yeah. No, I'm with you. I mean, it seems like it makes perfect sense. I'm imagining that a ton is happening already in terms of just the stable coins, like people trading on stable coins, vice versa. But you're right that it's like we're not gonna leave behind banks, and governments have massive guns and they have their incentives, and they're not gonna, especially the U.S. government, it's not gonna just let go of the control of the money supply, and that seems pretty clear. So, how does the banking system integrate with kind of a new, what would you call it, like a new protocol or a new transaction
Yeah,
layer to allow for
yeah,
international currencies to happen? It's like, yeah, you're right. The companies that work with banks that allow them to do this safely and securely have a huge leg up, because not everyone across the world, probably very few people, are going to be able to go from dollars in their hand or money in their bank account to send it to a crypto exchange to buy stablecoin in their currency and then trade that. And then,
yeah.
it's like, it's a lot of steps for people.
So let me unpack this for you. First off, stable coins are not that stable. So that's part one. Part two, if you need to move something in and out of crypto, you need to have three transactions correct. You need to have the actual movement of, say, dollars to euros correct. But before you even move to dollars to euros, you have to go dollar to some kind of crypto back into something, and then go into euros. That's three transactions you need to have correct. And when you're dealing with multi-million dollar transactions, you cannot afford the risk. You need to make sure that it goes through
Mm,
because the margins are just so tight. So if you have a friend of yours that's in Tokyo and went to the Olympics, and they lost their wallet, you would send them yen and you would be okay to pay the juice on that. And maybe you would have a margin that you would pay to somebody that could send that over TransferWise or Western Union or something like that.
yeah.
But you would never pay that margin on a multi-million dollar transaction. So
Yeah.
just something to think about.
Yeah. Yeah. That's a good point. Plus, to be too slow.
Yeah.
I
So
mean, that's probably what
yeah.
people are
So
doing today, but it's so
yeah.
slow.
So we're building a system that works today with traditional institutions. And we're building this so that it's as easy as possible for adoption and commercialization. We're doing it in the same pattern that they do right now. This is not a rip and replace type of business, because in large financial institutions, if you're going to get a new piece of technology in there, it might not cost you on the face of it from the new platform that's coming in to pay them a couple of $100,000. That's no big deal. But internally, it might cost millions to ensure that the flows are correct behind the scenes. And institutions need things to flow correctly 100% of the time, that you cannot afford to miss. So we're building this in a way that works today in a manner that does not interfere with their current processes, and then eventually move into more digitization.
That's cool. Where are you guys at in terms of like track? Like, are there banks using this? Or I still don't quite wrap my head around what it is. But
Yeah.
like,
So
where is the companies in the product?
Yeah, so let me just explain what it is we do. So we optimize liquidity management and power FX trades, and we do that using intraday lending so that you can have payment versus payment settlement protection. So that's the soundbite of what it is we do. But in essence, we take a transaction that takes 2+ days and make it happen instantaneously in a couple of seconds, and that eliminates time. It eliminates cost. We can decrease the cost by at least 38%. That's what we can quantify. I bet it's much more than that. And we also eliminate risk. And as I mentioned before, settlement risk
But
is unnecessary.
so you're creating a token. Like, what are the mechanics of this? Like, you're setting up an account where someone could transfer US dollars to on
Yeah,
behalf of the bank.
it's all institutional. So we
Mm,
provide a service inside of the ECN, the Electronic Communication Network.
mm,
We're partnering with them. It makes more sense to commercialize and monetize that way. And so this is not for a retail audience. So it's only for institutions. And
got it.
right now there's a handful of liquidity providers. It's more of an oligarchy, and we are allowing choice, and also making sure that we can decrease the amount of time and money spent. And if you could have your money same day, why wouldn't you? Is really what we're hearing.
Totally. Yeah. So you
So,
guys will go to you'll go to like a bank, and then you'll say, "Hey, we're partnering on behalf of these networks, these ECNs,
mhm.
and we built this cryptocurrency blockchain tool on top of that, and it's something that can
Yeah,
what would be the pitch to the bank?"
yeah. Well, first off, I would never use cryptocurrency in my pitch, because that frightens them. It frightens them a lot. So the pitch is, hey, you have a lot of things that you're doing with your money. Wouldn't it be better if you could have more control over that and do things at the moment when you're ready to do that? So that's the pitch. So they're having more control, and they can optimize their
Got
liquidity
it.
management better. So that, and without risk, because settlement risk is the number one problem in FX today. And that
Mm.
and we have the solution for it. And it's been that way since 1973, when
But
Swift.
how can you solve that? Like, you basically have to make sure that the other person or the other bank, it's the other bank, not necessarily, right? The other person's account sends the money the day later. So I
Yeah,
guess if it's all in one network, like, isn't this how TransferWise does it, where they own the account so that when you send money, it goes through faster because they know it's kind of in a closed garden where you're sending money from one TransferWise account to the other.
yeah, they do it internally within their
Mm,
system, and that's not a new concept. That's a fairly old, an ancient concept,
hmm.
to be able to do it that way. We do it in a much more elegant manner, and we do it with multiple parties. So I don't want to give you too much secret sauce, because we are pre-revenue, and we
Mm.
are launching soon. We have finished some proofs of concepts, so we've demonstrated to ourselves that we are able to do these transactions with real money in production environments. And now we're working with some larger partners, and some really marquee name brands. And we'll finish that up later this summer, and then we're going to make a lot of noise. So
Nice.
you'll be hearing about that. We have a lightning strike planned, and we're starting to do some rolling thunder. You'll see starting last week that we were making a lot of announcements, at least 2 a week, so that there's this constant cadence and drumbeat to create this echo chamber and make a lot of noise. So we are
Yeah.
very deliberate in the way that we're rolling this out, and we have some articles that are being published that you'll start to see, as well as this great podcast.
Yeah, totally. What does ninth gear mean? Where does that come from?
So there were 9 people in the room when we started thinking about names. That was
Ah,
part one. Part two, the ninth decimal place in some of these transactions matter. So, and also we like to drive fast. This is increasing the velocity of these transactions. And so why not make it moving fast?
ninth gear. That's pretty
Yeah.
fast. That's cool. Man, foreign exchange. My uncle used to trade foreign exchange when he was younger, and I always remember it being this kind of like dark, mysterious world that most consumers don't live in. And it seems like out of the 6 trillion, do you know what the distribution is between like people working and sending remittances home, traders just optimizing and trading liquidity versus who else would do it? I guess just business transactions. Is there
I,
like a woolly mammoth volume of
I
the foreign exchange?
there's not, and in fact, a lot of times when people have asked us for a book on Amazon, because people think that, oh, I'll just buy a book on Amazon and learn about FX. Well, one does not exist. So we have uh, a lot of experience on staff. We have, last time I counted, it was close to 800 years of capital markets experience, which is really important because we understand the flows. And sometimes I feel like we're plumbers because it's all about moving money
Yeah,
through the pipes, and it is opaque to most. And the fact that there's a lot of vernacular and also and jargon in this makes it more complicated. But in essence, we take a process that is, slow, and 48 hours is a lot of time to wait, especially in the world we live in today. There's so many fallen angels, companies that we just thought were tried and true, that we
yeah,
grew up with. They so many have declared bankruptcies, and we see, just walking around the streets, so many companies that have closed, and then new ones are sprouting up. So the way we do business is changing fundamentally,
oh
and
yeah,
we are
it's got to.
speeding that up. I mean, this, especially supply chain management issues, when you're looking at 50-week, year long wait on some of these products. When you can do your transactions and have the seller receive their money faster, that is so helpful, because then they can buy more goods and services so they can produce additional products. So this is all about accelerating global commerce, which is critical right now.
Yeah, totally. And it's kind of been a like what probably age old trend of people trading faster. I mean, weren't they building the New York Stock Exchange like closer? There's a whole bunch of regulations. I actually had somebody on who's telling me about this, where they regulate the wires and the distance between the wires and the exchange because people who have faster connections can take advantage of that latency, like really low latency trading,
So
which is
you
pretty
you've
cool.
you've touched on some really fascinating things, and you can read Michael Lewis's book Flash Boys, which is just a wonderful book, and it's all of it. Or you could watch The Hummingbird Project, that has some great actors in there, and it's all about milliseconds matter in this business. And so why are we allowing transactions to go the same way in this environment that they've done since 1973? I mean,
Is it because they're just farther away? Like I think in the stock exchange, everyone's so close, so the wires that they use are faster. Is foreign
well,
exchange just like you don't know who you're trading with on the other side of the
sometimes you
pond?
don't. Sometimes you don't
Yeah,
always know that you're a counterparty on the other side, but you get to select. Oftentimes, you get to self-select who you want to deal with. But it's not just the speed of the proximity and the wires on this. Oftentimes, it's because it's been done the same way since 1973. We have
God.
we are I'm never without my telephone next to me. And I prefer not to talk to people most of the time. I prefer to just have a text. It's just so much more efficient if I can text somebody.
Yeah.
Why are we still calling our trades in? When I went to see a bank in 2019 in London, they told me that their number one initiative that year was tape recording telephone calls.
I
It
think it
just
just comes down to like some people just like people just get fixed in their ways. I think in their like probably the 30s, maybe 40s, and then they're just like, I just want to do it the way I want to do it. Like my grandmother still has a telephone book. She's never going to give that up, and so I'm not going to try to convince her. But it's like as generations kind of come and go, I think this is the time frame that we're on for a lot of the change to happen. It's like
yeah,
that person who's dialing in their phone, like they're just going to keep doing that forever. But then eventually there'll be younger people who start becoming the big traders and the cycle kind of grows like that. I bet that's how it sort of evolves.
yes and no, because I know a company that started not that long ago who's still trading voice, and they do over 100 currencies, and the majority of them are done via voice because that's just the way their system was designed. So it's inertia is a powerful force in the universe. If
Oh
it's not
yeah.
broken, why would I change it? But that those are the same dinosaurs that are just going to be they're going to have their
Oh
lunch,
yeah.
handed to them, because this is a new way of doing things that makes sense, and it's more elegant, and it saves time and money, and also reduces risk.
Totally.
It just makes sense, and now is the time to make this happen.
Totally. What are other companies you find interesting, or other projects in the space that you find compelling?
There are so many.
Any
I think
specific?
that
Yeah.
I'm not gonna name names today, but anything
Oh,
that oh,
I'm just kidding.
we'll go out for a beer and we'll talk about that stuff. But I just see so many things evolving, and the dominant players that are today will not be the dominant players in the future. And
Yeah.
people need to adapt and move on. Just like 2007 was a great time, and so many new companies came out of 2007, 2008. We were going to see a lot more of these new
Mm,
types of players come out, and I think that we're going to see them faster this time around because there's
yeah.
not a there's just there's some geographic niches that happened back in 2007. Now you don't need those anymore. It used to be that, and I
Yeah.
still feel it. I live in Silicon Valley, and I still think it's a magical place for the following reason. Not only is it a great spot for open thought, but people think about competition in a different way. People are very easy to share ideas and share connections, which I'm from the Northeast, and it was not that. And especially working on Wall Street, like if you have information or you have an edge, you do not share that information. Where I learned out here, and I'm the founder, and most of my team is back east, which is why I spend so much time in Boston and New York. It we didn't I learned how to play the game out here and then applied it and brought people in. So I'm kind of the bridge and between technology and new way of thinking and the old school capital markets. And it's exciting to watch some of the new people that come into our company and see, like, why are you doing that, and why are you using Slack versus email? And I'm just like, oh gosh, just wait like 2 weeks and you'll understand. It's just, teaching these new ideas, sometimes you can't train people, and that's okay, but
Yeah.
those that are open to new experiences. I am an early adopter. I am not a laggard in any way. People that are open, there's just so many more possibilities of things that can happen. And so my problem with our team is we need to land this bird. We need to get into market and not think about all the different possibilities. There's so many other verticals that we're going to touch. And that's the reason why I believe that we will be a multi-billion-dollar company, because it's just wash, rinse, repeat. And FX is just one of many things that we have planned.
That's cool. Yeah, I agree with you. The Bay Area has such a unique culture where it's like, what are the uniquenesses? It's that you can fail, you can start something really ambitious and that's respected. You can fail at that ambitious thing and that's okay. I wouldn't say it's encouraged, but it's okay. And then it's kind of like you want to tell, if you're not telling, if someone says, hey, I have to say, you have to sign an NDA before we can start talking, it's an immediate red flag. It's like, tell everyone what you're working on, because people are working on so many different things that if you hold secrets, if you're like, okay, my secret sauce is so valuable, you're never going to attract talented people, because talented people are like, okay, I better understand what you're doing and it better be clear, and I'm going to drop everything else in my life to come work on this, because why? And it's got to like click. So the whole concept of the pitch deck, like the elevator pitch, that's such a Silicon Valley thing. So I
Yeah.
even take that lesson to life. Like, be succinct, be articulate in how you explain things so that it sticks in people. And I feel like that's the core concept of a startup founder is telling customers, potential employees that you're recruiting, investors, like being able to articulate, especially complex business models, what you're doing in a simple way that people can understand, ideally through analogy or some other simple
Mhm.
concept. Yeah.
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 So I always think that, most of the time failure isn't fatal. And I encourage my staff to try and experiment and create things, because you're never going to, you're never going to figure out something new if you're not afraid to, if you're afraid to fail, you keep holding on to that. Second, I believe that my superpower is bringing the team together. We have such an amazing team, and we do have a pretty even distribution between men and women at the company, which is very rare, especially working in FX. If you ask your relative that worked in FX, you would see that I'm always a stiletto in a room full of flats. I mean, it's just me and the guys oftentimes. And then you add blockchain or distributed ledger into that and forget about it. But at the end of the day, we have to be able to tell the story. And so I love the book by the Heath brothers, Made to Stick. It's orange with a big piece of duct tape on it. And being able to communicate and tell that story is so critical. It will turn investors or potential investors into investors. It will attract and retain talent, and will also be able to sell into companies and convert prospects into clients. So being able to paint the picture and tell the story in a way that is meaningful, no matter whether it's somebody that is 60 but understands FX like a 12-year-old, being able to express what we do in a way that they understand, or to explain it to a capital markets geek. There are multiple ways to tell the story, and as a CEO I have to be able to transcend no matter what type of meeting I am, and to explain the value of what it is that we're doing so that they understand and then can move forward. Because if they don't understand, they stop listening, and we want to
Yeah,
continue the
totally.
dialogue.
Yeah. Yeah. Did you learn a lot of that? Like, when you moved from the East Coast to the Bay Area and you set up shop at Plug and Play, like, what was the scene like there? That was,
So
remind
I
me, what year was
never
that?
so I
2017?
yeah, I was there looking at investments, so I was invited to
Yeah.
listen to some pitches. I never set up shop there. It's a lot of chaos over there. It's
Is it?
amazing
Yeah.
that so much stuff gets done, because it's just so many people on in a small space, and it's just constantly it's this constant energy there.
That's
It's just a
cool.
great spot. But it was going to as many sessions at all kinds of events that brought me to this place. I'm intensely curious. So I wanted to understand what was happening, and I wanted to understand all about blockchain. So I spent a lot of time at IBM with their Hyperledger Fabric area. I spent a lot of time studying what JP Morgan was doing. We're based on Quorum, which is something that JP Morgan open sourced and then sold to Consensus. I spent just a ton of time with geeks. Joined the Stanford Club, blockchain club over there, and just asked tons and tons of questions. And also, I did a lot of due diligence with Kretsu Forum. It's an angel investing group, and they do collaborative due diligence. So I learned how to evaluate companies in a very particular way based
Hmm.
on just people that are out here. There's so many incredible
What
folks.
was that one called again?
Keiretsu
Kret.
Forum, Keiretsu, Keiretsu.
Oh,
And
that's cool.
there's 3,000 members in chapters around the world. And so they're based here in the Valley. They're about 21 years old right now. And so Randy Williams is the person that started that. And he was um, playing golf with a lot of tech people and investing in real estate. That's his main gig. And he was losing his shirt on his tech investments. And he's like, what am I doing wrong? And so he put together this group of people to help him better invest and monetize his investments. And that's turned into a very large group of individuals
I
that
have to ask. I mean, what are they? Is there some technique, or they're looking at like market size? They're just having a checklist of things that they look at when they're assessing a company.
I think it's the same that most people look at.
Hmm.
Everybody has a little bit of a different way of doing it, and they're individual investors writing individual checks. I often say that when I do due diligence, there's a variety of things I look at: legal, sales, marketing,
Yeah.
product market fit. There's a variety of different items that I look at, but the one thing that comes out most is whether the team can work together. So how
Hmm.
the human interaction and how the individuals fit together is something that happens maybe like 5 or 6 meetings in. You've learned whether the team is really a great team or there's problems. And it's amazing to see what happens when you really uncover that.
Yeah, that's cool.
Yeah.
Wow. Well, Maryanne, congrats on all the progress, and I wish you guys luck when you launch this thing and do the lightning strike, as you say. That's a
Yeah.
good analogy for launches. I like that.
Thanks.
Um, are you active on social media like Twitter or
I am.
yeah? Is Twitter your main
Twitter, LinkedIn.
spot? Twitter, LinkedIn, awesome. And anything you guys are looking for? Are you hiring or looking
We are.
for
We're going to
investment?
be
Yeah.
scaling and scaling quickly. For most of the positions, it's making sure that we think that they fit in well. We hire happy, smart people that get shit done. And I cannot overemphasize the happy part of it. Nobody wants to work with a wah wah. So we make sure that the person uh, that we're working with is works well with us. We do not have an office per se. We have some places we work out of Boston and some co-location facilities, but and we probably will do that more formally as things go on. But it's more important that I find people that really understand what we're doing and get us because corporate culture is really critical. So we have events every once in a while we bring
Yeah.
together, but for the most part people like to live and they're happier where
Oh
and live
yeah.
where they
Remote, especially now, is like the default.
are. Yeah,
That's great.
people originally told me we couldn't do this remote, and we lost a big huge check in 2018 because they're like remote teams don't work, and I was like, well, they
Wow,
do now.
really? God, we're in a different world now.
They we are. Yeah.
2018.
So we're
Uh,
looking for capital, always accredited investors. If you know any, send them our way. And then we're going to be scaling and scaling rapidly next year. So if somebody's interested in doing that, they can apply on our website.
cool. All right. Well, we'll have to have you back on sometime. Thanks for coming
It's a
on today.
pleasure. I'm looking forward to grabbing a beer next time I'm in Boston.
Yeah, let me know. All
Okay.
right, Marianne.
We'll
Bye.
see you. Bye.